What is the going concern principle? The going concern principle is the assumption that an entity will remain in business for the foreseeable future. Conversely, this means the entity will not be forced to halt operations and liquidate its assets in the near term, at what may be very low fire sale prices. By making this assumption, the accountant is justified in deferring the recognition of certain expenses until a later period, when the entity will presumably still be in business, and using its assets in the most effective manner possible. An entity is assumed to be a going concern in the absence of significant information to the contrary. An example of such contrary information is an entity's inability to meet its obligations, as they come due without substantial asset sales or debt restructurings. If such were not the case, an entity would essentially be acquiring assets with the intention of closing its operations and reselling the assets to another party. If the accountant believes that an entity may no longer be a going concern, then this brings up the issue of whether its assets are impaired, which may call for the write-down of their carrying amount to their liquidation value. Thus, the value of an entity that is assumed to be a going concern is higher than its breakup value, since a going concern can potentially continue to earn profits. An entity prepares financial statements on a going concern basis when, under the going concern assumption, the entity is viewed as continuing in business for the foreseeable future. The term foreseeable future is not defined within ISA 570. But IAS 1, Presentation of Financial Statements, deems the foreseeable future for at least 12 months from the end of the reporting period. The auditor considers some factors in deciding if there is substantial doubt about an entity's ability to continue as a going concern. These factors might: 1. Negative trends in operating results, such as a series of losses. 2. Loan defaults by the company. 3. Denial of trade credit to the company by its suppliers. 4. Uneconomical long-term commitments to which the company is subjected. 5. Legal proceedings against the company. This was a short explanation about the going concern assumption. Thanks for watching.